Hey everybody, what's up? We are back with another stock analysis. Today we are looking at AMD or Advanced Micro Devices. So I figured with me reviewing Intel just a couple days ago, the next best thing would be to cover AMD as well. They're very similar companies. AMD has been suffering a bit in the stock price over the past couple months. I think a lot of that comes from them not seeing growth nearly as much as Nvidia. However, I also think they're probably one of the closest companies to NVIDIA, other than maybe Qualcomm and Broadcom, which I believe are catching up a lot faster. So, huge player in the semiconductor industry. We're going to go through their financials, take a little bit of a look into their earnings reports as well as their chart, and kind of go over some things there. So, if you're interested, make sure to subscribe. If you haven't, I make these videos every day of the week going over all different types of companies. So, subscribe and let's get into AMD. So, just a few things to go over before we get into the financials here. AMD does semiconductor businesses, data centers, clients, gaming, and embedded. They're basically a overall doing a little bit of everything company in the semiconductor industry. Some things to look at: market cap is at 186 billion, so very similar to Intel, which I think was at 190, although I don't remember 100%, but very similar to Intel, or maybe 90 billion. Very similar either way. But another thing, target price is 170 currently. Long-term growth rate is at 30%. So right now we're sitting at 114. So a lot of potential upside there. Actually, a ton of potential upside there with the target price listed here. Next thing is their growth summary. You could see longer term, they have very solidly positive projections. Especially the 10-year 15% sales growth CAGR is crazy. That is 15% growth per year for the next 10 years. It looks like they're expecting a little bit more uncertainty within the shorter timeframes within the next year to 3 years. A lot of this, I think, is because of advanced development, which is what I'm going to say is most likely causing all of these negative numbers. Is they're focusing more on advanced development, getting into things like AI and higher levels of computing. So I'm going to assume that is what most of this is for. We might get into a little bit of that with some of their earnings statements and press releases with that later. But overall, we could see on their chart here, they topped out right under $200, actually just over $200 in early 2024. And since then have been on a very clear downtrend, which actually we can get into their stock chart overall right here. And we can see they are long term in a uptrend, and they have not really broken the support from that too much. Obviously, they're in a very significant low right now with some of the recent news with the semiconductor industry. They definitely were not immune to that. They're suffering from that just as much, down almost, if you see up here, they're down 6.7% this week so far, and it is Tuesday. So a little bit of a rough week for the company, but we'll get more into the chart later on today. Moving into the financials now, we're going to start out with their income statement. So I don't think I have reviewed AMD before on the channel, but let's zoom out to their fiscal years here and kind of see where their overall growth has been. So they saw a ton of growth in the past, just about 3 years ago, going from 6.7 billion in revenue to 23 billion in revenue in the span of 4 years, which is massive growth. A little bit of a decrease in 2023. I think part of that is because of focusing on development, which in my opinion is a good idea. Obviously, with the sort of NVIDIA revolution in the entire semiconductors space, a lot of other companies need to kind of catch up, which I think AMD is trying to do. You can see they are now having record sales in 2024, which is a very positive sign. Their net income is also getting back up to fairly close to where it was at an all-time high, which is good. Operating income also looks very solid. Although again, very much below their all-time high back in 2021, despite having a ton of sales growth. So those decreases in margins are not fantastic. However, hopefully very soon we could see them return to that range. Another thing to note is that their overall shares have been increasing fairly consistently over the past couple of years, which isn't great. Generally, you don't want to see companies diluting their stocks like this. Now, over the past 3 years, it has been very minimal, going from, I believe this is millions of shares, so 1.612 billion shares to 1.623 is very, very minimal. However, before that, they added 400 million shares within 1 year, which isn't fantastic, but overall in the future, we want to see this number decreasing. But right now, it's mostly fine for the company. Moving past that, going into their balance sheet now, we can look at how their assets are doing, which overall we're seeing enormous increases in assets. And actually, this does not include 2024 here yet. So let's move to their quarters. And we can see right now, it looks like they are at an all-time high in their total asset value, which is really good. It kind of shows there is a lot of solid growth in the company, not just sales, which obviously they do want sales growth, but at the same time, they need solid things to increase growth for their future. And that comes from their assets. So a lot of that is coming from, it looks like they have a ton of short-term receivables, which is actually good. That's basically just money they haven't received yet. So very, very positive there. Other than that, just seeing this solid, consistent asset growth is very good. And seeing the all-time high here is also good, especially with their all-time high sales. That basically kind of supports the theory that their assets are working better for them, which is good. Another thing I'm seeing here, they have absolutely zero short-term debt over the past 2 quarters, which is fantastic. That is exactly what we want to see here. And actually, I believe I was looking into this company a bit ago, and it may have been a different one now that I'm looking at it, because I always assumed that AMD had a ton of debt, and they really don't at all. 2.2 billion in long term is very little. You can see that's actually been coming down every single quarter since September of 2023. So they are slowly but surely paying off that debt. And actually, they had just under 3 billion about 2 years ago. And even still, any amount here is very minimal compared to how much cash they have. So their debt situation is actually fantastic. Everything here looks very, very solid, especially the debt. Having too much debt, especially for a high growth company like this, could have a ton of problems in the future. So seeing that they don't have that, very, very different situation from Intel, which has a massive amount of debt. So very positive thing to see here. Next, we're getting into their cash flow. So overall, their operating cash flow is positive. You can see their funds from operations are fairly consistent, right around 1.2 billion, which is good over the past couple quarters. Of course, we saw at the end of 2023, they had an uptick to 1.6 billion. But overall, I think the consistency here is a bit more important, as we saw the sales a little bit slowing down over the past 2 years. So seeing the consistency is definitely positive here. Next up is the investing cash flows, which we could see they have been selling a lot of investments actually over the past 5 quarters. They have been consistently selling off investments, which overall is fine. You could also see they do have some acquisition activity, which is definitely a positive thing. They have been, looks like they spent a little over 600 million on acquisitions in the past 4 quarters, which is definitely something really solid that we want to see. Other than that, CapEx looks fine. We're actually at the lower end of their recent capital expenditures, which is good. We're at 132 million compared to being a little bit higher than that in the past few quarters before that. So overall looks pretty positive there. Financing activities, obviously reduction of debt. They don't have a ton of debt in the first place, so we're not going to see too much stuff here. And also we could see they spent a fairly decent amount recently on repurchasing their stock, which we did see on their balance sheet earlier, or sorry, their income statement earlier. There is a little bit of a slight decrease in their total shares, which is always a positive thing to see with the company. And overall, most important thing, their free cash flow is consistently positive and actually at the highest that it has been since September of 2022 right now. So looks pretty good for the company currently being at a recent high in their free cash flow. So hopefully we get to see a lot of growth coming from them in the near future. Moving on, let's go into their segment history. We can kind of visualize where their sales growth has been. This doesn't include 2024 yet, which is at an all-time high, but you could see even just before that how explosively this company has been growing recently, with just a little bit of pain, especially in their client side area in 2023, with just about almost a $2 billion decrease in revenue from just that segment. But overall, in 2024, they have fully recovered that loss in sales as well as hitting an all-time high. So I think we're perfectly fine there with the company. Some other things to look at, and we are going to go to the quarters once again because they don't have 2024 fiscal year yet. One thing to note is that their gross margin has improved greatly from 2023, where again, lower sales, we saw lower margins in 2023 as well. We're at 42% right now. Same thing with the operating and net margins. The net margin is at the highest it has been once again since 2022, which is fantastic. Very good to see those kind of improvements. And honestly, seeing these improvements over the past few quarters and the stock chart looks like this over the past few quarters, I think there could be a very solid buying opportunity, especially considering 2023 was arguably a fairly bad year for the company. Lower sales, lower margins. And of course, this is only talking about financials right now. So from a financial standpoint, 2023 was fairly poor, and they've added a ton of value to their financial strength since then. And the stock price is down and actually lower than it was in some parts of 2023. Now, obviously, 2024 has been, they had some major highs and now some significant lows. I think we can see them bounce from somewhere in this area and continue going higher just based on what I'm seeing from the company. Obviously, there is a very, very long term support range right around this area. I don't think it will go this low, right down to, looks like anywhere between $80 to $90 per share is kind of where the support line is. I think at this point it is significantly higher than that. Obviously, if we zoom in a little bit to the daily time frame, we could see they have kind of broken through some support recently. Some recent lows they went underneath, and it looks like they're kind of in a support area here. You could see a lot of activity happening right around the 110 to 120 area for the stock. So it could bounce from here, continue higher. It could keep going lower. Like I said, towards that $80 to $90 range, which is always a possibility. However, just based on the strength in the financials here, I'm going to say that I think we can find some support a little bit earlier than 80 to 90. But anyway, continuing with the margins, all of their profitability margins here look very solid. A lot of growth over the past few quarters, a ton of improvement. And one other thing to note is their debt to equity, which normally a healthy debt to equity is under 100 to 80%, and they are at 4% right now, which is phenomenal. They have so much room to leverage themselves further in the future. They have a ton of available debt that they can use. One thing to argue, though, this is mostly with the management style, is with a debt to equity ratio this low, are they utilizing their debt leverage enough? That is a huge question that you have to ask. They could possibly be doing more. But overall, I think just based on they are making a very significant amount of net profits every quarter, they do have a positive free cash flow that they can reinvest into the company. They don't really need to take out more debt unless there are some larger projects or overall strategies that the company wants to take. They can obviously use debt to go in those directions, but overall, they don't need to. But it's something to consider when you think about how or why their debt to equity ratios are so low. Should they be higher? Should they be leveraging their debt more? So that is something to consider. However, in this specific situation, I think it's perfectly fine to be this low. It puts the company in a very, very strong financial position. They're going to have a ton of available debt to use in the future if they need it at all. So overall, I think that's a perfectly fine thing to have. Now going a little bit into their earnings, we can look at their metrics recap if it wants to open for me here. So going into a couple things here, we could just see their growth versus estimates. So data centers beat slightly, client beat, gaming came in a little bit under, actually just about 100 million under, and their embedded segment also came in over as well. So 3 out of 4 of their segments beat, which is fairly good. Their gross margin beat estimates and also surpassed their year ago gross margin of 51%. They're at just under 54 now. Operating expenses came in a little bit higher, but overall, I think revenues as well as their margins kind of surpassed that either way. Their operating margin actually came in a little bit below. However, compared to a year ago, it is a significant improvement. And their operating income per segment is listed right here. So data centers, you could see they have massively increased their profitability with data centers, basically tripling their operating income in 1 year. Client side, same thing. They essentially doubled that in 1 year. Gaming saw a very significant decline, which again, we could also see in their revenue as well. And their embedded segment also saw a very solid decline as well, which overall is outweighed by the data center and client segments. So I don't think this is too major. You could clearly see they are headed in a specific direction, and that is data center focused. So overall, as long as that is consistently working for the company, I think that is completely fine. And then their adjusted free cash flow sat at just about $500 million, which is fantastic. Looking into some other things, we can see their street takeaways, get some analyst commentary in here. So this basically just goes over what some specific analysts are saying about the company. You could see after this report came out, which I believe this is their Q3 2024, we do not have their fiscal year 2024 out just yet, but it should be out soon. Their shares were down just about 10% from this earnings report, which honestly seems like it was fairly solid to me. However, one big thing here could be their decreased operating margin, and their expenses came in higher than expected. Also, possibly some decreased guidance. But let's read through a little bit of what their analysts have been saying. So, target lowered here, target lowered, target remains at 200. And the last one maintains a perform, which is fine. That basically just means it'll stay with its sector. So GPU business might match or exceed its CPU size, but growth margins remain uncertain as production shifts. Client market gains and a robust GPU outlook looks positive, but a March reset lowers next year's figures and might reduce operating leverage. So overall, there's a lot of uncertainty with the way they are changing their products to kind of move forward into the future. It's really just where will the growth be? How will this affect their margins? You can see they are moving from the MI300 to MI325 coming up very soon. I'm assuming that process is happening right now. But overall, it does look like there is some positivity with it. For instance, they raised the outlook on their C24 M1 or MI300, which is good. Raising outlook is always good. But also they at the same time lowered their overall guidance, and their gaming margins, as we saw here, are honestly a fraction of what they used to be, which is genuinely terrible. They lost almost 200 million overall in operating income here. So that is definitely a big thing. That could also be what is driving, or at least partially driving, the decrease in their stock price. Definitely something to be concerned about, considering it was a very significant segment of the business and now basically is falling off significantly. But overall, I would say the earnings report was mixed. There's a lot of uncertainty. If you want to read through everything here, please feel free to pause and do so. But now I'm going to head a little bit more into detail on the stock chart, which honestly, I kind of already did go over most of what I wanted to here. I do think if the stock does hit the 80 to 90 range, I believe it will be a very, very strong buy. I will most likely be investing myself if it does reach that range, although I don't know if I would really want it to go that low from here, because that would definitely show a lot of weakness in the company. However, just based on everything that I've seen, I think there is a lot more value here, especially considering right now they're at their all-time high in sales. I really think that this drop is mainly caused by uncertainty within the company. I think if they just in their next earnings report, or just in the near future, show a little bit more confidence in some of those suffering areas, like their gaming segment, I think we can see a ton of growth here in the near future. So overall, I like the company. I think it's, even at this price right now, I do think it is a buy, or at the very least should be considered. Obviously, do some more research on your own. I usually just focus on financials here, but especially towards the $80 to $90 range, very, very strong buy then. But overall, right now, I still think the company looks very positive. So other than that, that is all I have for AMD. Thanks for watching. Make sure to subscribe if you haven't, and I will see everybody in the next video.